That's what I think is the most fascinating thing, because there is no regulation that says that cryptocurrency or Bitcoin cannot be used as a kind of asset in collateral, in lending, and everything else. Actually, there are tons of laws. There's a lot of private commercial law that has been passed in several states that actually has provisions just for Bitcoin and talks about ownership and tracing it. So the system is already set up. The thing that actually makes it more difficult is that you have an organization known as Fannie Mae, and they have a particular thing called the selling guide. And in the selling guide of Fannie Mae, they say specifically that no virtual currencies can be used as assets for collateral. Now, it is not a rule, it is not a law, it is a guideline, a recommendation that has been set up by this government sponsored enterprise. There are mechanisms to change it. If they were to remove that portion, then that means that we could actually have Bitcoin based mortgages.
So, hello everyone. I'm Renee Sorchik. I'm the VP of Research at BPI, and I'm here today with Yaël Ossowski, who is one of our fellows, and he's going to talk to us about Bitcoin-based mortgages. So, before we begin, Yaël, do you want to give a little background about who you are, and then we'll get into the concept of Bitcoin-based mortgages?
Absolutely. I guess in my normal day job, I'm a consumer advocate, having founded the Consumer Choice Center with some colleagues in 2017. And I've always been very much interested in technology, in sort of decentralization, and figuring out how we can actually promote better policies for innovation. I've also been into Bitcoin for a while, since 2013, and it was just kind of a good, convenient marriage that I could bring some of that knowledge and stuff that I've been doing over to BPI, where I've been helping out, and it's an amazing team that's spread out all over the country and world.
Yeah, I mean, you're in Vienna, right? So we have people in Singapore and Vienna, all over the U.S. It's great. Well, maybe to start with, what got you thinking about Bitcoin-based mortgages? I'm curious how you came up with this, and where this brilliant idea came from.
Well, I think it's twofold. One thing I love to do is I will use the decentralized communications protocol known as Nostr and look at different companies that are being launched or initiatives. And there's a lot of stuff that's happening around lending. There's a lot of people who are figuring out how to tap credit markets and to use Bitcoin as a way that we can actually get people liquidity for things that they need or want over whatever time period. Sometimes it's just 6 months or 1 year, 2 years, and there are various plans and there are ways you can do it, just using the technology of the Bitcoin blockchain. So I thought that was very interesting because obviously, if you're in America, we're very reliant on the credit system, credit cards, loans, mortgages, buy now, pay later. Sort of having access to easy credit is one thing that makes the US different than most other countries in the world and actually has allowed the American middle class access to credit and the ability to buy things and to be able to take risks in ways that other countries can't. And I saw just different products that were being developed both in Bitcoin and in crypto world. You see that a lot with stable coins. And we can see that there's very mature markets that already exist there. You've already had kind of lending that's happening. There are a number of different Bitcoin brokerages that are announcing different kind of lending protocols and things that they're going to be sending out to people. And one big thing we have to realize is for people who are, let's say, millennials, who are early young professionals or mid-level professionals, they're going to be making big purchases, and one of them might be property or a house. And it's one thing I kind of noticed with a lot of banks and having done banking policy and research on that. There's all kinds of innovation that everyone's talking about, right? Oh, we want to have this type of thing. And with the new Trump administration, maybe rules will be different for Bitcoin and cryptocurrencies. And you have the Office of the Comptroller of the Currency saying now banks can touch Bitcoin in a certain way. And that's all well and good. But realistically, if we as, let's say, younger people are going to be using Bitcoin and really trying to empower our wealth, we're going to be using it to buy things. And we're trying to make Bitcoin a new money, a separation of money and state. What better way than to start thinking about how we can actually use it for paying for our life and paying for where we're going to raise our families? And noticing that mortgages are one of the biggest expenses you'll ever make in your life, definitely one of the longest commitments you'll make in your
Mhm.
life. People are already making that commitment with Bitcoin and they've already accumulated it. So I thought, why not kind of blend those ideas and see what exists in policy or doesn't exist in policy, which might be holding that back.
And maybe you haven't really ran the numbers or looked into it into detail, but if you were to try to appeal to policymakers, I mean, what kind of numbers are we looking at in terms of like how many people would this apply to? I mean, there's a lot of young people in the U.S. We know young people disproportionately hold crypto and Bitcoin. Um, you know what? And then I guess the other question would be, do you think that there is an interest? A lot of people are like, never sell. But I think like, what good is a like a pet rock if you actually aren't using it to enrich your life in some way? So
Yeah, and I think this is the interesting thing about Bitcoin is that anybody can be a Bitcoiner. All they need to do is just have some. And what most people are using it, if you ask across the entire, if you were to be able to do a UTXO survey with absolutely everyone, people hold Bitcoin because it's part of their net worth. It's part of
Mhm.
what they have. And they've exchanged some kind of value for it, whether it be dollars or euros or some other currency. And they count that as part of the wealth of the things that they have. And whenever you're getting any kind of financing, you're basically having to calculate what your net worth is and your collateral in order to make larger loans like a mortgage. So if we were to look overall, I mean, let's say I think the latest estimate is something like 40%, 35, 40% of Americans hold Bitcoin or have touched Bitcoin in some certain way. If we even go down a bit lower, perhaps these are people who have more than five or $10,000 worth of Bitcoin. Maybe that's just 10%, or maybe it's 5%. Overall, there's going to be at least 1 million people who are in the United States who have some kind of net worth that is worth it, that they would put on a balance sheet whenever they're making an application for a mortgage or a loan, or even as part of their assets. Even if you have a bank account and you're applying for, even if it's a debit card or a new credit card, they always ask you, what are your assets? What's your
Mhm.
income? I think most people in their brains just kind of calculate Bitcoin as well and put that there. And I think that's why, if we're talking about all these things about how we're going to, try to upgrade the current system, monetary systems, so that Bitcoin can be integrated, I don't necessarily think we have to do that. And that's why I wanted to focus on a solution and something that is less about introducing a new rule and more about repealing one that actually restricts the ability for different financial institutions, mortgage providers to actually allow people to put Bitcoin down as some kind of collateral if they want to have a loan. And that's kind of what we have at present. And I'm hoping at some point we'll be able to change.
I mean, can you go into the specifics a little bit more? So how does this actually work? Is it literally like if you default on your mortgage, this collateral will be taken? Is it more just like, here, I have this net worth, so I can like increase the size of my mortgage? Is there kind of different modalities this could go in? What does a Bitcoin based mortgage look like?
I mean, realistically, you're just swapping the dollars for Bitcoin, and it starts with your mortgage application. And again, the U.S. has a very highly competitive mortgage financing market, right? It's very big. There's billions upon billions of dollars. There's all types of government agencies also involved, and all types of private companies. And every time you fill out your application, whether it be with one of the larger banks or one of the mortgage providers, you're having to list your net worth, you're having to list your income, you're having to list any kind of other assets that you have. Right now, at present, you're not able to put any kind of cryptocurrency as an asset. And
Mhm.
that means that for people who are younger, who have collected Bitcoin in their own wallet, self custody, and while you might regard that as your net worth, the government does not, and neither do these companies. And it's only because of a certain provision that exists in law. So, what would that look like if it were to be the reverse? It is that people who currently have Bitcoin, who have it in their own custody or even in a custodial wallet they have access to, they would be able to list on these forms that their net worth includes that Bitcoin, meaning how we all see it colloquially and sort of in the culture. We have this much Bitcoin, 1, 2, 3, 4, 0.1, 0.2, whatever it might be. That is part of our net worth. Therefore, I am credit worthy because I have these assets and I can use that. how it would normally work in the mortgage is just like if you were to put down dollars. If you can't afford it, you'll be foreclosed on. You'll have to pay it back. There'll be some kind of repossession of the house, or there'll be other ways that you can get the money. But that's always a kind of risk that creditors take when they lend out money. We're just talking about introducing Bitcoin into the natural position where it should be instead of only dollars right now. Because right now, Bitcoin is not even seen as something that can be native to this environment.
So, what would have to change regulatorily speaking in order to make this happen?
Realistically, in the regulation, next to nothing. And that's what I think is the most fascinating thing, because there is no regulation that says that cryptocurrency or Bitcoin cannot be used as a kind of asset in collateral, in lending, and everything else. Actually, there are tons of laws. There's a lot of private commercial law that has been passed in several states that actually has provisions just for Bitcoin and talks about ownership and tracing it. So the system is already set up. The thing that actually makes it more difficult is that you have an organization known as Fannie Mae. So Fannie Mae is a early New Deal era sort of government sponsored enterprise that is supposed to essentially buy up mortgages and essentially be a kind of regulator with force and financing in the housing market. And they have a particular thing called the selling guide. And the selling guide essentially sets the rules. And because Fannie Mae and its later sort of brother organization known as Freddie Mac, which many of you have heard about, in the financial crisis and after that, because they basically control or own about 40 to 50% of all US mortgages, they kind of set the standard, the guideline for what can be considered an asset in mortgages. And in the selling guide of Fannie Mae, they say specifically that no virtual currencies can be used as assets for collateral. Now, it is not a rule, it is not a law, it is a guideline, a recommendation that has been set up by this government sponsored enterprise. So, Fannie Mae and Freddie Mac, they have been in the conservatorship of the US government since the financial crisis of 2008. There are mechanisms to change it. If they were to remove that portion, then that means that we could actually have Bitcoin based mortgages.
And so, because they kind of set the standards, and other banks by default follow them, but they don't necessarily. There's no law outlining that they have to. It's just kind of the common practice, right? That other banks follow the guidelines of Fannie Mae and Freddie Mac. I mean, if another bank were to go out on its own and do this, what do you think would happen?
So they technically could. The thing is that most of the banks or mortgage lenders, they normally do not hold the mortgages themselves. It's normally too risky. If rates are changing, like we've seen very high interest rates in the last few years, or if there's some kind of housing downturn generally where prices might fall, they do not want to be holding the bag, as it were. So,
Mm.
what has kind of developed is this kind of securized mortgage industry where many mortgages are kind of packed together, put into one single rate, everything that's 3%, everything that's 4%. And those are sold to Fannie Mae and Freddie Mac. So they kind of act as a buffer,
Mm.
and they act as if it's essentially a moral hazard play. So many people who might be libertarians are very skeptical of government intervention in financial markets, are obviously not big fans of Fannie Mae and Freddie Mac. You could ask a lot of questions about how involved they were with the 2008 financial crisis and the meltdown and the credit default swaps and all the rest. But they do take up a significant amount of the oxygen in the mortgage market. And thus, whatever guidelines that they set for mortgages, how you write the mortgages, how you offer the mortgages, essentially becomes the default play. Now, Congress could easily pass a law and say that all financial authorities and institutions should view Bitcoin and cryptocurrencies as a rudimentary asset that can be used in collateral. Sure, but actually, you can just reverse this selling guide announcement that Fannie Mae has because it's only one portion. It's right there, and this could be done away with tomorrow, and it would actually provide clarity to an industry that could perhaps come out of nowhere or could grow. And it means that perhaps millions of people, hundreds of thousands of people could have access to mortgage financing that they didn't have before.
So who has the actual authority there to update these guidelines, and what is the process there? And if it, does it, is it worth it to call your congressman and complain and lobby, then have them ask them to change it? Or is this a different kind of process to get this fixed?
So we have an interesting setup just right now in terms of the Trump administration. So we're speaking in May 2025, and we have something called the Federal Housing Finance Agency. This is essentially the key agency that oversees all of the different programs in the federal government dedicated to home ownership and particularly mortgages and the like. So this is an agency that at present is led by an entrepreneur by the name of William Pulte, known as Bill Pulte, and he is in a quasi regulator of Fannie Mae and Freddie Mac. Again, it's a bit of a complicated situation because the government in 2008 took over Fannie Mae and Freddie Mac. They're in conservatorship. So technically, Bill Pulte is the head of both of these kind of mortgage finance companies that are sponsored and owned by the government. It's a very weird setup. There has been talk by the Trump administration to actually sell these back to the market so that they would not be sort of government owned regulated enterprises, but they would actually be private enterprises. It's a very large plan. This will take a long time to happen, but Bill Pulte is the head of the Federal Housing Finance Authority, and that means that he actually has a say over the guidelines that are implemented at both of these institutions and organizations. Bill Pulte also happens to be someone who's interested in Bitcoin, also someone who happens to understand a lot about the housing industry and financing. And I think it's the perfect opportunity to take up President Trump's call to make the United States the sort of Bitcoin and crypto capital of the planet, as he said many times, and to implement it into policy. And he can do that realistically with just a pen. This is not anything that Congress has to repeal or introduce. The Fannie Mae and Freddie Mac, as sort of government sponsored enterprises that deal with mortgage financing, they set their own guidelines and rules for the writing of mortgages. He could change that tomorrow. And I think that is really the most interesting thing is we don't have to talk about a very complicated legal political process. Just let banks see Bitcoin as an asset, which they already do in so many other circumstances. Let's just make sure they can also see that when it comes to mortgages and financing too.
So let's say that tomorrow he updates these guidelines and he says, you need to allow crypto to be used as an asset. Um, I mean, how long do you think it would take for banks to start allowing this? Because they're very risk averse, right? Um,
They are. I think, generally banks have gotten the message, and you've seen many organizations like the American Bankers Association and their different lobby groups that represent the banks in Washington, and they've had to understand. And you've had the Office of the Comptroller of the Currency that has come out in recent weeks and said, "Hey, look, you're free to play with Bitcoin and cryptocurrencies. Just get the current licenses, be sure you're following the certain rules, be sure you have good disclosures, but you're able to offer this to your customers." So the government has been giving a green light to industry and to innovators. Right now, I think it's just no one's sure exactly what it looks like. You already have a number of banks that are in the European Union that do offer stuff like this. So you can buy from a bank just your Bitcoin or whatever the token if you really want to. And I think in the US, yes, there's going to be some risk aversion for a little bit, but there's already on the brokerage side tons of interest in Bitcoin and sort of Bitcoin properties, all the different companies involved with Bitcoin, all the bonds, all the ETFs. So there is a lot of money that is there. There is a lot of interest. They just need to figure out their product fit. They have to look at the technology. They have to look at, do we run our own node? What do we do for our self custody? Do we use a custodian? And that's stuff that they have to figure out in the market in order to meet the demand of the customers who would like to use some of these services and then be able to take out larger loans or set up a mortgage. I mean, we're only talking right now specifically about housing, but if you were to actually have a greater approach to this, you can make it for business lending, right? You can have
mhm.
it for small business administration. There's a lot that's changing there that people who want to start up a business, if they had access to Bitcoin, what could they do with that? what kind of jobs could they create in their communities? What kind of value could they bring to the table as an entrepreneur? Again, it doesn't have to be government, but if you are allowing people in the private market to pick that up as capital, to put down their Bitcoin as collateral and assets, which people are privately doing anyway, I think it's only good.
So basically, it comes down to the entrepreneurial banks and how soon that they can move it forward. I mean, I'm just waiting for a all Bitcoin title company. I think that would be really interesting. You know, so people closing literally all in Bitcoin, maybe on their houses, and like you're sitting in the escrow, and the title company is the one that shifts it over. So,
Yeah, and again, the United States is not like super experimental here. We are generally as a nation and as a people, but there's a bank called Zappo Bank, which has been around for a very long time. They created the original custodial business that Coinbase eventually bought and now houses pretty much all the big people's and big institutions Bitcoin. But they have a product in Europe based out of Gibraltar, where it's just a standalone dollar, euro, Bitcoin account. And
mhm.
you have a normal banking routing number, and you can use Bitcoin Lightning if you want to within the app. It's actually all integrated, and then people have all kinds of different products if they want to. They can, you know, take a small loan if they want to and have that paid in Bitcoin or anything else. And the rates are obviously going to be high because there aren't too many people who are involved in this market just yet. But that's exactly what I think has to happen. There's been a lot of conversations about some of the Bitcoin lending and lending protocols from some Bitcoin exchanges. And a lot of people say that the rates are just way too high, but this is a very nascent industry. It's just
Yeah.
started. We don't really know legally what it looks like. But if we're actually able to start this and have the horse race when it comes to mortgage financing, I think it's just very good for the industry. And then it's also good for us, potential homeowners and people who probably could not afford to have a typical $800,000
Yeah.
mortgage in the Bay Area or in the
Well, no,
nicest part of
that
Miami.
there's no house for $800,000 in the Bay Area. Like, keep going.
All right,
It's
even
not
higher.
possible.
That's why I'm from North Carolina. Like we haven't even reached that level yet. But if the average, let's say, house price is $500,000, yeah, that means you need to have a lot of cash right there available. Now, if we were able to actually use Bitcoin, then so many more people would be able to achieve that dream.
Yeah, for sure, for sure. Um, so I was going to ask you another question about this, and I can't remember what I was going to say. So let me come back to it when it pops into my head as you were talking. I was like, oh, we should talk about. But so I'm curious though. So let's say William Pulte does this tomorrow, and so the guidelines are changed. But then another 4 years, let's say AOC gets voted into office, totally different administration, and I'm assuming his position is a political appointee, correct?
Yes.
Like, okay, so she
He,
appoints
he's a
someone.
big Trump person. So,
Yeah,
yes.
yeah. So she appoints someone in her administration, very liberal leaning. That person could re-update the guidelines, right? In theory.
Well,
Um,
yes, at that point, it would depend on whether Fannie Mae is still in conservatorship of the government.
yeah.
So there's so much stuff
Let's
that's
let's say that
happening.
it is. Let's just go with
Okay.
that it is. We'll go back to that scenario next, but let's say let's say that it is.
So they could technically, I see, it wouldn't be, they would stipulate a new guideline, and the new guideline would say, for the purpose of collateral, cryptocurrency or virtual currencies, as they call them, cannot be considered assets. So they could technically do that. And I think that's why, with so many laws and executive orders and basically everything related to Bitcoin right now, this stuff has to be enshrined, and you should always have some kind of law passed by Congress, because that's the most permanent thing. If you don't want a court challenge, if you don't want like a court striking it down or having some injunction, or if you don't want the next people to just come in and just revoke that executive order, you need to have things passed by Congress. And despite all of the interest, despite all of the money, despite all of the attention, we really haven't gotten any meaningful congressionally passed bills related to Bitcoin and cryptocurrency at all. There's a lot of talk, there's a lot of proposals, there are things that are in the Senate or in the House, and now they're in markup, and now they're here. So far, so many things have been either voted down or not crossed the finish line and have not actually gotten enshrined into law, which should be the focus. So, yes, it is true. If you had an AOC administration in the future, and their aim was to ensure that fewer people can use Bitcoin and fewer people are able to use it as money how they see fit, they could absolutely put that back in the rules that virtual currencies cannot be considered assets for the purpose of collateral. They could absolutely do that. I don't think that's where most people are. I think most people don't even know that this is a possibility, to be frank, and haven't really thought about it. But again, we shouldn't be blinded by things that don't exist because the rules or sort of the meeting of the moment isn't there. Because there's all types of financial products, all types of different Bitcoin products that we know can exist and we know are already existing in other jurisdictions and other countries. And if we had clarity, those would be created, those would start providing benefits to people who want to be homeowners, it would create jobs. So you actually have this entire positive aspect of this economy that could rise if only we kind of saw to it to have a 21st century mindset rather than 18th century.
Right. So it sounds like it needs to be, if we really want to make sure that this sticks, it has to be a legislative process, not just from the guidelines of Fannie
I
Mae
mean,
and
if I'm
Freddie.
more hopeful, I would always say the market, it's up to market demand, right? Because what currency do people want? Like, can people use gold? Are people able to use gold to buy and sell and trade things? I mean, technically they can, as long as they price things in dollars. And because our money was based on gold for such a long time, like we have that in our history, we just haven't been able to upgrade that. So I think if there's market demand for that, if people actually start using Bitcoin for not just large mortgage transactions, but more for ordinary transactions. And, as we've written about at the Bitcoin Policy Institute, we'd love to get rid of some of the capital gains that come
Mm-hmm.
with actually spending Bitcoin, which I think are ridiculous. And those laws should change. So there's always a kind of step ladder of things that
Yeah.
you kind of would have to do in order to make sure that we can normalize using Bitcoin as an asset and as a money. There are many different steps, but nothing stops you from doing it now. So you might as well start.
And I would, my hope would be that even if a new administration came in and like this wasn't enshrined in law, it was just these guidelines that, there's been some new data that show that Bitcoin is skewing a little bit more non-white. So reaching some more marginalized people who maybe aren't able to have a bank account or who aren't able to have traditional savings, to save up for a home. So there's a more that would give more opportunity to more people to access mortgages that maybe traditionally couldn't if they could use their assets like crypto, right? And so that helps a lot of people on the margin. And not just that, I think the economic side of things, because where I am, houses are sitting, like our inventory is growing. People are not selling because like the cost of a mortgage is so high now, they don't want to, they want to stick with their low rates, right? And it's crazy too because the prices haven't really come down. They should, but they haven't. And so what's happening is just the inventory is growing and things aren't moving. And like I have some good friends that were mortgage brokers. They all lost their jobs, like a long time ago. They haven't been able to come back. And I think that something like this that could really spur that growth would be really good for the industry and for the economy, right? So there would be a lot of knock-on effects from this.
Yeah, and your sort of anecdotal evidence is absolutely on point. We've had very high rates, at least recently and throughout the pandemic. Right before then, money was very free. People
Yeah.
were like all of a
Things were
sudden
selling like
like
hotcakes. A house would be on the market 2 days. It was gone. It was
I
crazy.
saw. I actually saw. I'm trying to find this chart here. It was from the Federal Reserve Bank of St. Louis, which also uses a funny name, Fred. And they have like the home ownership rate from let's say 2019 was 64% of Americans own their home. It shot up to 68% by 2020. So you had this like shoot up, and you hadn't had that for nearly 20 years of people who are with loose money, with COVID checks, whatever was happening. People had all this money. Rates were still low at that moment. People were going out and like buying houses and finally doing it. People were working remotely, so they wanted to be out of the cities and they could afford things a bit out in the country. So obviously, like home ownership is something that is ingrained, I mean, realistically in the primal American mind. But you have had all of this kind of movement, and we didn't even talk about the housing issues. California, definitely in New York, Pacific Northwest, Illinois, you've had very limited housing stock. You've had rising prices for a very long time. I kind of mentioned it when we discuss, being a normal, let's say, millennial, who's working some kind of professional job, like your ability to buy a house and to have enough money to put down is just harder and harder. And I even saw statistics the other day that show that even Generation Z, for some reason, because many of them are not going to full university, they're actually able to afford homes faster than many millennials. Just like
Oh, wow,
frustrating.
that's crazy. That's wild. I believe it,
and
though. That makes sense.
and because Generation Z is also much more invested in alternative currencies like Bitcoin, they could also have an advantage there. And all of this is an aside from all of the issues that we know about when it comes to housing, to building, to permits. That's all one thing. We're talking purely about financing and being sure that we can actually get to the table. And just considering the number of people who actually look at their net worth today and are very heavy Bitcoin, it would be very good to be able to open that up so that we could also participate in the sort of home ownership game and the American dream of owning our own property, right?
For sure. Yeah. I mean, I think this would just have such a massive impact because, like, all the pieces that you've said, the disproportionately young people own crypto. And I think it's quite high, the rates. I wish I had the Nakamoto project in front of me, but I don't, is it like 30-40% of young people? And then they could use that as an asset and then go buy homes that they weren't able to. And then, you solve this mortgage problem, you solve, you more economy, people have their jobs. Yeah, huge, huge impact.
And what's funny about all of this is obviously philosophically, many Bitcoiners are very much opposed to long term debt. Um, there's not a lot of people who are very maximalist Bitcoiners who are willing to sit down and say, for the next 30 years, I will pay this amount at this rate. It's just something that is also a mentality change. Many of us prefer apartments. We have short term payments, prefer to stack sats instead of like put that into
Mm-hmm.
having to buy a new roof or something like this. But people have all kinds of different lives, all kinds of different goals. They have different families. At least give us the option.
Yeah.
And again, opening that up so it's not just mortgages, but also business lending and everything else that you might need in life. Uh, I touched on just how different the credit market is in the United States, and I think it has improved our standard of living just insanely as compared to other countries. Like we have cushions as American citizens in our finance system that you just don't have in other countries. These other countries, it's very, very difficult to try to borrow money. Rates are very high. There's definitely a lot of shame if, let's say, you go bankrupt or like you have a loan that goes bust or a business that goes bust. It's very difficult to pick yourself up again and to try to start. But in the US, we don't have that. We have no shame when it comes to starting and taking a risk. That's the reason why we happen to be one of the richest countries in the world, because people are able to take risks, and they do so because our credit markets are open and the ability to access that capital is very open. We just really haven't traditionally done it when it comes to housing. Now, Michael Saylor can do it. He can take, all the assets of strategy and everything that they're doing and their treasury and all their Bitcoin, and he can use that to go get loans to buy more Bitcoin or do whatever else. That works in the stock market and when it comes to sort of assets in a company, but not yet for ordinary people who just would like to buy a house. And I think that's what has to change.
So true. So true. So if you had one final appeal to Pulte, what would you like to say?
You have to follow through on President Trump's wish to make the United States of America the Bitcoin capital of the planet. There's different versions of what that looks like. Not all of them are in the halls of Congress. Some of them are in the regulatory agencies with people who have power, much like you, who could swipe a pen and allow people to actually take their net worth and to enter into a traditional loan agreement like our grandparents and our parents before us, but let us use this new hard money that we call Bitcoin to do that in the 21st century. You can make it happen right now.
Very well said. Very well said. Anything else you would like to add about Bitcoin backed mortgages?
No, I think, again, I've only been talking about this and thinking about it from a policy perspective. Again, if I had more time, I'd probably go into the entrepreneurial part of it and would start offering it myself. But I don't have those skills or contacts. Maybe someone who's listening or other people who might have found this somewhere on YouTube or wherever else. Maybe you have it. And that's another thing is that many of these products are being created today in the Bitcoin economy, We're going to have insurance companies. We are going to have title companies. We are going to have every single type of company that exists will at some point become a Bitcoin company, and Bitcoin will be integrated into what we do every day. So there is an entrepreneurial opportunity right there. If there's demand that's created there, that also puts pressure on the regulators to actually recognize how people are using this. So that's yet another argument, yet another angle. And I hope we can actually align the stars for the moment that President Trump has demanded of people who are in his government and actually do that so that the American people can benefit. So I think that is my greatest hope for now.
I mean, it'd be great if someone could compile. It's like every day a new company doing Bitcoin treasury is announced, right? And so David Bailey just announced Nakamoto, right? He's starting that, and then is it Strive is one of them that also,
Well,
and then
it's one of the MicroStrategy kind of. Oh no, Strive is the asset management. Used to be Vivek Ramaswamy's company. Yeah,
yeah,
there's
yeah,
plenty of them.
exactly. Okay, but there's a lot of like really large ones. Of course, there's MicroStrategy now, and then there's MetaPlanet, and all these other ones are just being announced in terms of the treasury. So it's becoming more and more apparent that Bitcoin is here to stay, and it's definitely an asset.
And I think you bring up a great point is that look, you have all of these companies that are forming and their entire goal is just to buy as much Bitcoin as
Mhm.
possible, right? And they're able to do it, they're able to get loans, they're able to use these convertible notes. Why don't we also allow individuals to do that so that they can get stuff
Exactly.
in real life?
Exactly.
And this is why, the markets are very free in the United States and I don't want them to be less free, but let's just also open it up for ordinary people who would like to buy a house for their kids and to install, a swing set and to have somewhere that they could live for the next few decades and generations. We should also allow people to do that. Still allow the risk taking that happens on Wall Street or many of these other companies that are accumulating Bitcoin, but also let those of us who are not the board of directors of some of these to try
Hmm.
to profit as well.
Yeah, definitely. Because we don't have that the assets to start the Bitcoin treasury. We have a small treasury, right? We just want to, invest some of our wealth in a house and not have to. I mean, I have friends that have had to move like 7 times in 7 years because their landlords are selling the house or something happens, and you don't have a lot of control over your life if you don't own your own house in some ways, or if you want to remodel or you want to fix something up or you want to put a swing set in, like you said. So this would be great for so many people, for sure.
Well, I hope so. And, if there are some places where housing policy is really good, Austin, Texas, different parts of Florida, in the Carolinas, Tennessee, any of these areas, they have very good housing policies. Tons of people would love to live there, move there. If they were able to use Bitcoin backed mortgages, then that means they could actually fulfill their life and be able to use their Bitcoin in order to do it. And what's the point of all of this? Bitcoin allows us to be free and to live and to make our own choices that we control ourselves. That's what this policy should allow us to do, and what's what we should be free to do every day.
So you bring up a good point. So what if a state enacted like state legislature to allow this, and then they're trying to draw people to that state, say like North Carolina, for example?
We open up a very interesting can of worms because technically in the United States, we have a dual banking system. So we have federally chartered banks, and then we have state chartered banks. And this is a kind of issue that's brought up in the stablecoin legislation debate. So technically, yes, you could have a state that has something on the books that considers Bitcoin to be collateral for the purposes of assets and collateral when it comes to house financing. They could technically do that. It's just that because Fannie Mae specifically has such market power, basically touching 40% of all mortgages, everybody follows that guideline. So you could do it. You could do it in a state like Wyoming, which is very Bitcoin friendly, a place like Texas, perhaps, even Arizona. You could technically do that, but then you'd have to look at, do they have the financial institutions there? Do they have the state chartered banks that are also mortgage providers? The U.S. is a big country with many different actual markets contained within the states. There's a lot of banks that are based in South Dakota and Utah, for instance, for one reason or another, or some of them are based in Florida for another reason.
Mm.
So you could perhaps do that. It might be an interesting backdoor. You just have to be sure that there's enough industry there to also warrant that change. And it's always better just to have something done at the highest level, just so everybody has clarity and then the races can actually begin.
I mean, that's fair, but given if for some reason it doesn't happen, I was curious just thinking about, maybe that's a good way for a state to lead the way, but like you say, you need these different pieces. So I don't know much about state banking and that how many of them have mortgages, but that would be a really interesting thing to look into.
Well, there you go. You've given me more research to do. Thank
There
you,
you go,
Renee.
your next blog. You could look into that, or you could start delving into these companies that are Bitcoin treasury companies.
Yes, I'll see. They'll have always many more Bitcoin than me, but it doesn't matter. But yeah, the state based thing is a really interesting question too, because obviously I've looked a lot at state policies and how they can impact Bitcoin, how they can actually allow people in states to use Bitcoin freer than they otherwise would. So that might be an angle, something interesting there. Again, another example of just clarifying the law and make sure that we can use it how we see fit.
Well, we'll look for your next blog then on the state angle of Bitcoin based mortgages coming soon.
Yes, all right.
Any other closing thoughts?
No, I think that did it. Thank you so much for allowing me to experiment with this idea. If other people are interested or have some other ideas of things to look at, you can find me kind of anywhere, Nosterx, and on the BPI website.
And we will definitely link to your blog. And if folks are interested in talking to Yael or other fellows more, we welcome you to our summit on June 25th in DC. You can even apply for a discount code using Sorchik21. That's SORCHIK 21. You can apply on our website. There's a link to the policy summit. We would love to have you, and Yael will be there, and he'd love to talk more about Bitcoin based mortgages. So, thanks
And
so
many
much.
other things. But
Yes,
thank you,
and many
Renee.
other things.